What's up, everyone? This is Sean Rampersaud here with the Mortgage Group. And today I'm going to be talking to you about a topic that's very dear to me, and that's how to get a mortgage if you're a commission salesperson. Now, I'm a commission salesperson, and it can be super frustrating to get a mortgage because our income fluctuates, it goes up and down. That being said, there are banks that specialize in dealing with commission salespeople directly. So if you've been declined by your bank, you need to reach out to me so that I can direct you into the right place for Canadians. Getting declined just because you're a commission salesperson is BS. Some of the banks will specialize in commission sales. And you know what? A lot of times you make a lot more money than the salaried person does. And some banks understand it, some just don't. I've literally helped hundreds of commission salespeople get approved after a bank has told them no. So how do I do it? Number one, I deal with every bank. So I deal with hundreds of different banks in Canada. And basically the way it works is the banks have black and white rules. I don't. I will fit you in wherever you fit. So depending on the type of commission salesperson, whether it be insurance, mortgage, real estate, retail, car sales, doesn't matter what type of commission salesperson, business to business, you name it, photocopier salespeople, we can help you get approved for that mortgage. So commission salespeople are paid in all different ways. The first and the most simplest way is a commission salesperson is paid a base plus commission. So let's talk about base plus commission first. So if you're first starting your job and you need to qualify for a mortgage, the bank will only accept your base. If you've been there for over 2 years, then they will accept a 2-year average. So your last 2 years of T4s. So what documents do you need to bring? If you're a base plus commission salesperson, you need to bring your last 2 years T4s, you need to bring an employment letter, and you need to bring a recent pay stub. The second type of commission salesperson is a person that is getting a straight commission paycheck. This happens often like car sales, real estate, mortgage, that type of thing. So for these people, they're going to also take an average of the last 2 years. That being said, if the most current year is lower than the previous year, they will take the lower of the 2 years for your income. So mortgages are broken down into a couple of different things. There's income, and then there's debt, and then there is your credit. So all of these things have to match in order for you to qualify for a certain amount. The less debt you have, the more you qualify for. The greater the income, the more you qualify for. The greater the income versus debt, the more you qualify for. So the third type of commission salesperson is somebody that owns a corporation. So that's a real estate agent that's been around for a while, or a mortgage broker, or a car salesperson, or an insurance agent that owns a corporation, and then their company is paying the corporation. Those people claim a very, very small income usually, and they have a problem and a hard time getting approved for mortgages. So I have a solution for that I'm going to talk to you about very soon. So first, I want to talk about how you set yourself up for success. The first way is trying to make sure that your credit score on Equifax is 680 or above. 680 or above, you will qualify for the highest amount. You'll also qualify for the best rates. So I would say you should push for that. And the way you push for that is making sure you make your minimum payments every single month on everything. You make sure the utilization on your credit is less than 30%. So don't go out and buy the truck and then buy the Mercedes Benz and then buy the trailer and then buy, all the toys before you buy the house. Buy the house first, so that the debt's not sitting on your credit bureau, and then go buy your toys after if you must. So let's talk about how to get approved if you own that corporation. Well, the type of documents that the bank is going to be looking for is not just your last 2 years of T4s. In this case, you'd be getting a T4A from your employer. So we would want your last 2 years of business financials. We would want your incorporation documents, and then we'd want some proof that your taxes are paid. That's if you have a credit score of 600 or above. And in that case, you only have to put 5% down. Now, there is a special program called the Stated Income Program for you. and that will allow us to bump up your income. So, for example, if you own a corporation and you're a commission salesperson and you make $500,000 a year in gross income, but you're only claiming 50,000 in personal income, then it wouldn't be unreasonable for me to say that you have an income of 200,000 so that you can qualify for a higher amount. In this case, there are some rules. You have to be employed for over 2 years in order to qualify for that by your corporation. So I have some tricks up my sleeve. Now, another trick I have up my sleeve is for a person that is just a straight salesperson. They get either a base salary plus commission or a straight commission paycheck. Remember how I told you we use your last 2 years? Well, one of my tips is if you are far in to a year, and let's say you're in November or October of a year, we can take your pay stubs and then we can take your last year of T4s. If the income from the current year is higher, then we would average your current year with the last year T4s. Now, don't tell the banks I told you this, but that's a trick that I can do to make that happen. Now, if you walk into a bank or if you talk to most brokers, they're just going to tell you to take the last 2 years. And that's just what might not work for some people. So what kind of lenders can commission salespeople use? Well, of course, you can use some of the big banks. You can use B lenders. And with B lenders, those are for people with credit score below 600. B lenders, private lenders are for people with credit scores below 600, and they all like commission salespeople. Ideally, you want to be with an A lender. Those are the ones with the best rates. The B lenders have rates that are about 1% higher than the bank. How do the B lenders do it? Well, the B lenders qualify you in a different way. You don't even need to be self-employed for over 2 years. You don't even need to be working at that job for over 2 years. You only need 1 year of employment through a B lender. So they'll take the last 12 months of bank statements and they'll average that to come up with an income for you. So if you're planning on buying a house and you're a commission salesperson, you definitely want to plan ahead. You definitely want to be looking at your credit. You want to minimize the amount of liabilities sitting on your credit bureau. So credit card debt or car payments or whatever that might be, lines of credit, student loans. You want to make sure you file your taxes on time so that you have the documents up front if they're asked for. So if they ask you for a notice of assessment, you have a notice of assessment because your taxes are filed. So pre-prepare yourself if you're a commission salesperson and you're going to be applying for a mortgage. Makes it way easier. So getting a mortgage overall, if you're a commission salesperson, can be hard if you're dealing with the wrong person. That's why you should reach out to me if you're planning on buying a property any time in the next couple of years so that I can pre-prep you on what things you need and how you can, and explain how you can get the absolute best rates and terms on a mortgage. Unfortunately, the banks just don't understand, and a lot of mortgage brokers also don't understand how commission sales works. My name is Sean Rampersaud. Thank you for watching the video. Reach out to me if you have any questions. My contact info is in the comments below.